And good evening, 5:10 p.m. on Tuesday, April 8th. Just put my little chart here together, but this the one of the main things this helps me is in market selection and which markets to trade, and also with breakouts. Normally breakouts is one of the best ways to trade, giving a market a couple of days to consolidate, and then so that it's more likely to give some movement out of a breakout. But the markets have been so crazy and so wild that we have all these inside bars and all these three bar triangles, tons of them. But it's hilarious because when you look at the market, you know, typically, your three bar triangle are these little boxes like this and that they break out of. But look at this one and this one and this one. So three bar triangle simply means that the the close is below the high that was made in the past 2 days and above the low that was made in the past 2 days. So you see, this is the high for the past 2 days. This is the low. And so because this bar falls in between those two, it's considered a three bar triangle. So the idea is that you're in breakout mode, which is sort of hilarious because you see the size of these bars. This doesn't look like a breakout out of a range like you expect in this situation. So there's all these three bar triangles and inside days showing up, but it's sort of irrelevant right now because the market's just crashing. So this morning, I got up at the normal time for Europe, and it was pretty quiet this morning. It just doesn't seem very tradable. This was sort of what was happening this morning, chopping higher up and down. And then this morning we did get a little run up, but this this little run up this morning that happened just wasn't very tradable, and I didn't want to get long and do anything with it. If I look at it on this chart here, this is the S&P 500. So you can see this morning, this is sort of what it looked like this morning. So here's this sort of broke above an area here. So I mean, there was some opportunity, but it was just, it just didn't look very good. So I didn't want to get involved with it. So I stayed out of the market this morning. I ended up going to the gym about 10:30, and while I was at the gym, normally I like to just be in and out for these day trades, but based on the size of these market moves and understanding that at this point it's not really, oh, the stock market's going down, let's short the stock market. All these investors and hedge funds and institutions, they own a lot of stuff, and they go and they pick different markets that they think will go up. And this is only 5,000 contracts per bar, so this is pretty busy. You can see the market chopped. This looks pretty choppy, but it was pretty quick ride down. If I look at this is the Nasdaq on a 35,000 per chart. So here's this choppy sort of run up this morning, which I didn't trade. The market started to come down here. I got back from the gym and I thought, one of the reasons I just want to sort of stay short the market now because there's just a lot of liquidation that's going to have to happen. This has nothing to do with some prognostication about the state of the economy or anything. It's just, the money supply increases and the money supply decreases, and leverage has to get worked out of the system, and you know, funds have to go bust and so on and so forth. So there's just going to be a lot of selling, and with all the programs out there, the momentum based programs that trade this stuff, you can see the kind of momentum we're getting. I think it's better to just try to grab some shorts when there's an opportunity to get short, wait for some sort of bottom. So That way I can hold overnight. So I decided to take a bunch of really small positions. That way I wouldn't be concerned with all the volatility. So what I did was I um, just sort of made a big basket, and you see one, two, three, four, five, six, seven, eight, nine different things, and these are the most economically either the most economically sensitive, or they're sort of breaking down the most. I mean, this was somewhat of a guide looking at these red. I mean, I can't believe, look at the coppers on a 0.21 on a 2-day RSI. The S&P 500 is a 1.6. I mean, they're basically literally shooting straight down. So, anyways, looking at the weakest markets, so the most economically sensitive. So that's going to be the stock market, crude oil, copper, silver also. Although silver, like if you look at silver here, it's a 25, and it's not these low numbers. But it also is a market that can really, once this market starts crashing, it really is an industrial metal. It's actually a byproduct when they mine copper. Silver is a byproduct of it. So while it is sort of considered a hold of monetary value like gold, it'll crash. And there's the Australian dollar, as I pointed out before. Big mining, manufacturing base in Australia, a lot of natural resources. It just tends to more go with the economy. Whereas if you look at some of the other currencies, the euro has actually been going up. British pounds at 21. Canadian dollars hanging in there. So I took a position short the Australian dollar. And the two that are not so much economically cyclical, but just the charts they could crash is the the coffee and the cocoa. And that's just more based on the chart. Just look at a chart of those real quick. Just look at the coffee real quick. So, with the coffee, we're just sort of trading out. So here's the daily trade. We're just trading off this fact that it's just certainly this has something to do with the liquidation, but you could see what rallies we've had. And it's so, I'm sure it's a strong market. I'm sure there's some strong fundamentals, but it's had a good 6, 7 months to elevate, and you get this sideways sort of movement, and then you just drop like this. So I've also got a short in coffee, and then cocoa. Um, It's sort of the same situation. It's been a high flyer, but you could see it's in a downtrend now. But it just sat at this level for a long time. Tried to move up, and it's just going to crash here. It hasn't broken the lows yet, but I put a short out on this. Only one contract. So everything I did normally, what I'm doing is I was doing um, so this is $1 million account. What the account value is now 1.1 million or something. So this is the column that determines margin. So if I was trading the Nasdaq, I do four Nasdaq contracts. So the margin I use about 100,000 in margin, or about 10% of the account. Um, and I decided, okay, I'm just going to go super tiny so I can withstand the volatility and sort of make a short basket of stuff. Um, and look at, they're all in the green. I mean, it is just as you don't expect everything to just be in the green so quickly, but we had a big sell-off today in the afternoon, so I was fortunate for that. But you could see silver, I just, instead of doing 8 contracts, so here's my margin calculator. So like silver, 8 contracts, copper, 14 contracts, stock market, 6 contracts, NASDAQ, 4 contracts, Australian dollar, 67 contracts, coffee, 9 contracts. So that's sort of what I was geared to do. And what I said, I'm just going to go super small. And so my whole basket, instead of one commodity using up 100,000 in margin, I've got a whole basket using up 130,000 in margin. But this is something that I'll hold overnight and just sort of, so I won't be so worried about it because it's a basket. And and yeah, everything sort of went down. Cocoa hardly budged, but anyway, so instead of 8 contracts of silver, I've got one. This is the Nasdaq, but this is instead of the E-minis, which is 25,000 in margin per contract. So I was doing 4 contracts. This is the micro Nasdaq, and I'm short three. So this is 1/3 of one entire contract. So this is 1/3 of 1/4. So this is 1/12 of the normal trading side. It uses a total margin amount of 9,000 instead of 100,000. But I did the Nasdaq, the S&P, and the Russell 2000. So it adds up to 9 and 6 is 15,000, 20,000. So 20,000 short in stock index futures. So again, that's 1/4 the size. Most of that's sort of what I did is try 1/4 the size or less. So um, coffee only 2 contracts instead of 9. Copper instead of 14 contracts, I did 3. So copper's using up the most margin. You can see it's using up 29,700 margin. We're short 15,000 worth of margin in crude oil, which is only 2 contracts. I think crude oil we're trading usually 10 contracts or 15, 10 or 15 in crude oil. Crude oil, we're usually trading 15. So, and I only shorted 2. So, but I made a basket. So you can see it ranges anywhere 15,000. The biggest position be copper. Coffee is 23,000. It's only 2 contracts. So anyways, there's a whole basket. I'm going to hold this overnight, 134,000. And it was just sort of, and that margin, this is the margin requirement, and it represents $1.7 million worth of stuff. Now you can see, just for instance, with currencies, so 17,000 in margin, you can buy 600,000, or in this case, short 600,000 in the Australian dollar. Told you I'm geared to margin to do 67 contracts. I only did 10. So that just shows you what small positions I have. But yeah, 600,000 in the Australian dollar costs 17,000 in margin. Whereas if for in the case of silver for 17,000 in margin, I was short 150,000. You can see it's based on the volatility. It's not based on the notional value. But anyways, it's a whole basket of short $1.7 million worth of stuff and 28,000, just to show you a couple other charts and sort of how things set up today. So, and how we ended up there. So, the stocks. So here's the NASDAQ. This is 35,000 bars. So this is each one of the 1 day, 2 days, 3 days. So here's this Monday morning gap down crash. There's Tuesday's well, actually, I'm sorry, that's Monday. Um, yeah, Monday. I'm sorry, this is Sunday night. That's why I'm getting confused. This is Sunday night's gap down. Then this wild rally Monday on nonsensical news. But a move like this, it just gets all the stops out so quick and scares the bejesus out of everybody. That we only literally had just over a day of this retracement and consolidation before it started going down again. Whereas if you see here, it's like 1, 2, almost 3 days we consolidated before we started going down again. Whereas you had this huge uh, ranges and shot up so high, took all the stops out. So whereas so it didn't take so long. So and then we shot down today. So this one I thought we'd close at the highs and I thought maybe a short tomorrow, but it's sort of coming down here and I thought, well, I'm doing such small positions, I better make sure I short. So I sort of got lucky. We're really glad I got into these positions because man, they just took off to the downside. So that's that one. Crude oil, um, crude oil. Here's crude oil. There's the volatility from yesterday. So it did break its low. So it's at new lows. So this one's real weak. This one, we had this run, and as you saw the stock market chart, we had this run up and down, and then it sort of ticked higher and it ended up here. But copper just wouldn't bounce, and it just stayed sideways and started to break later on. These markets just look so bad. This is one of the charts that convinced me not to waste any more time and just to short it. And so it was already down a little bit. I think I shorted it here. It had come up here and so off that stock market making that peak, it was around here. Probably shorted it right here. And then you have this big move down. Um, well, that's what a lot of other charts look like. The biggest example of that was copper. So copper there's this Sunday night whoosh down, this big print all the way down and came all the way back up. And then on that move up on Monday, that wild move up, this is the best it could do. It didn't even make a new high on that big wild news rally. And I just saw this thing. So I didn't short this until it was down here. I got back from the gym and I'd drawn this big triangle. You can see this consolidation triangle I'd drawn with these blue lines. And I saw it was already below this, already broken below this triangle. So I didn't get a great price on this either, but this is like the weakest market. But when I saw this come in, I was like, I got to hurry up and get short a bunch of this stuff. So that's copper. Let's look at the Australian dollar real quick. So, we had this actually, this was Friday. So the Australian dollar was Friday as it made its big move down. So this is the big rally yesterday, which doesn't look like much here. But yeah, I got a decent price here, somewhere around here. And yeah, it's just tick, tick, tick down. And now it's at the low. So it looks like it wants to go lower. But yeah, that one looks like a falling knife too. When you have these ranges and then they just shoot down like this. Um, stay short. It just looks really weak. So, anyways, that's what we're doing. We ended up with, so this is micro Nasdaq, three micro Nasdaqs, S&Ps, Russell 2000, coffee, copper, crude oil, cocoa, Australian dollar, silver. As long as the economy and you know this momentum continues to bounce, all these are almost have to go down together. The exception of that is the cocoa and the coffee, being agricultural commodities, being that those have been in short supply, and I think there's some legitimate economic reasons. Those could go back up and lose money on those. I mean, this is a very small profit, so we didn't move too far into the money. So those could hurt us, but as long as the Fed doesn't come out and start printing money like crazy, most of these positions are just going to keep moving down. Um, three micro contacts in the Nasdaq. We're already at 4,500. We're at 5,500 in the Australian dollar. So, anyways, we're up $28,000 on the day, um, and we caught a pretty big move. So we just have a tiny position. But if we have another leg down tomorrow, this account will balloon pretty quick, and there's a pretty good chance that it's gonna continue on down tomorrow. But even if it doesn't, we're not at new lows. Like here, you're making these new lows and this big momentum. Here, we're not at new lows yet. So, we could have an ugly day tomorrow. I mean, we could come back up, and retest. Having broken and having this big leg down, I'm not too worried about it. But, we could get hurt in holding overnight. We could give back these profits real quick, but I think we've got a basket of things, really small positions in a wide variety of things. So I think overall we'll be all right, and we'll just try to hang on to these positions and see if we can catch another big sell off and make new lows and some stuff. And if not tomorrow, we might have to sell. Like I said, we might have to sell for a little bit if these things bounce and might go into the red, but and show some losses or end up taking losses on everything if things turn around. If the Fed comes in and says we're going to bail everything out, I mean, we could lose a lot pretty quickly. As we know, these markets can move. But I think right now we're just in such a severe liquidation mode. We've got hedge funds and institutions out there panicking like crazy. So balances, so the account, real-time account equity, so we're up to 1.15 million. So we're up about $150,000 since we started this project. Um, and using up 134,000 in margin right now. And we've got 28,000 in profit on the table. So that's where we stand. Cross our fingers for tomorrow. Signing out. Have a good night.